Morena na mihi nui ki runa e te tūmata tīmata o kororo ne mea katoa. Me wehi kei te atua, hei manaki, ki tēnei reo korona, ko Andrew Bailey ahau, no Wanganui ahau. Good morning, everyone. It is fantastic to be with you this morning. Hey, my thanks first of all goes to the Financial Services Council and to Richard for inviting me. Also want to acknowledge Rob for that very kind introduction, and also for all your long 9 years of service. You have done a fantastic job. I also want to acknowledge Samantha Barris from the FMA, and probably slightly unusually, I want to acknowledge my team from MB, who have been working with me over the past few months, who are with me here today. I just want to, first of all, say that the FSC has always been an important voice in terms of the financial services sector. I look forward to continuing to work with you all to help achieve your mission to improve the sector for all New Zealanders. And as Richard said, I've had reasonably long involvement in coming to many of the conferences over the years, and it's good. These are the type of opportunities I really value. In terms of economic priorities, our government is focused on getting our government and our economy back on track. Our 100-point plan on rebuilding the economy outlines 6 economic priorities to drive us towards an economic goal of improvement. These are eliminating wasteful spending, delivering tax relief, cutting red tape, building infrastructure for growth, boosting productivity, which particularly in areas like manufacturing and building construction is massive, and of course strengthening trade and investment. We've already made great progress. We've reenacted the 90-day trial periods, and we've dealt with the so-called fair pay agreements by repealing that bill. The Reserve Bank's dual mandate has been amended to focus only on maintaining price stability, i.e. lowering inflation, to name a few. There's still much to be done, however, including in the financial services sector. There are a number of reforms we will enact to make things easier for businesses, and we've already made a start on some of these. Today, I would like to outline some of the fundamental changes that relate to the financial services sector. But before doing so, it is useful to reflect on where we've come from. The seminal work that the Honourable Simon Power did in the 5th National Government that created the whole new framework for the sector was very important. Not only did it address poor conduct, but obviously led to the establishment of the FMA in 2011. I saw Simon, I just ran into Simon last night in the airport, and said, Simon, I'm going to be talking about you today, because he did actually leave a legacy. Since then, under governments of both colours, or both sides of the House, there's been a series of legislative and regulatory changes aimed at enhancing conduct by financial institutions. Regrettably, this layering of regulation and legislation has led to the architecture governing the financial services sector losing some of its coherence, and has certainly led to a lack of clarity for many of you market participants. Many of the changes were well-intentioned, but today also, to some extent, are failing to deliver optimal outcomes for Kiwis and businesses. For instance, the increased complexity of is the Reserve Bank steadily involving itself in conduct issues, and the Commerce Commission having prime responsibility for monitoring conduct under the CCCFA. In some cases, certain entities are regulated by 3 different institutions. In essence, our Twin Peaks model has become increasingly complex, imposing costs on firms. Furthermore, many financial institutions now find themselves holding multiple licences from both the FMA and the Reserve Bank, adding to their operational burden. For example, a large diversified financial institution may have to apply up to 5 licences, and you all know them all: FAB that Richard talked about before, discretionary investment management, licenses, managed investment schemes, etc. There's a whole raft of them. And of course, the CoFI reforms, as more appropriate referred to as the Financial Market Conduct of Institutional Amendment Act 2022, has exacerbated the situation by introducing yet another licence requirement and is imposing substantial compliance costs on financial institutions to document their fair conduct programs. My view is that we are not sufficiently focused on taking a proportionate approach in developing fair conduct programs. Additionally, the Commerce Commission's role in monitoring and enforcing credit regulation relating to consumers through the CCCFA adds further complexity. I see value in consolidating responsibility for the financial markets conduct and the CCCFA under one single regulator. I consider the Twin Peaks regulatory framework, initially developed in Australia but now widely adopted overseas, as being appropriate. However, I am proposing to reinforce this model with better coordination and cooperation between regulators. Specifically, I envisage a model where the RBNZ serves as the prudential regulator and the FMA as the conduct regulator. I therefore propose that responsibility for monitoring the conduct in respect of the CCCFA be transferred from the Commerce Commission to the FMA. To address the duplication issue of licensing requirements between conduct and prudential regimes, I propose to consolidate and simplify existing conduct licensing requirements. The FMA could issue a single licence covering conduct issues for financial institutions, while also clearly defining obligations within the Financial Markets Conduct Act, meaning easier reference for financial institutions as they grow and contract their businesses. Furthermore, I would like to remove duplication in areas such as initial fit and proper persons assessment required by both regulators and the need to report separately on cyber resilience. Turning to the CoFI regulations or requirements, I do not want to discard CoFI, but rather perform a targeted reform to ensure that the good conduct obligations are proportionate and fit for purpose, acknowledging the positive general framework. The two aspects include, first, reinforcing the principle that the responsibility for determining what is an appropriate fair conduct program for their specific business lies with the applicant. This means that liability lies with the management and the board to identify key risks and areas of concern and develop their fair conduct programs accordingly. In essence, this represents a move to a tailored and proportionate approach. And secondly, I'll be requesting that the FMA issue clear guidance for smaller institutions to meet minimum requirements of conduct. To put this second aspect in context, I believe it is essential all financial institutions have in place fair conduct programs that cover the following aspects of their businesses. The first one is, how do you engage appropriately with your clients and your customers? Secondly, how do you develop new policies and products to be fit for purpose and meet regulatory requirements? Thirdly, need to establish transparent fee structures and charging arrangements, particularly or especially if you have intermediaries. And the fourth one is the development of an adequate complaints process. Those are four vital elements. Whilst a fair conduct program might look different for a credit union with 200 customers compared to a bank with 2 million customers, the importance of fair treatment remains the same. Let me be clear, these changes are not about lessening requirements for appropriate conduct. It's about ensuring that financial institutions, you, have guidance from the FMA and take responsibility to meet your obligations more effectively without compromising on conduct standards. I know Sam will have more to say on the role of the FMA in ensuring CoFI applications meet minimum standards and the issue of responsibility of financial institutions to determine what is the appropriate fair conduct program to be put in place. I realise many of you have already begun preparing fair conduct programs for the introduction for the regime by 31st of March 2025. You need to continue to do so. But I do intend to ensure that appropriate timelines and transitional arrangements are in place to avoid any issues of uncertainty, which will include grandfathering of all CoFI licences into a single conduct licence in time. I hope this provides you with some clarity and clear sense of direction of my intended reforms. I aim to make it easier for businesses to operate and intend to move quickly to address these issues. Another of the changes we will be making is to the Credit Contracts and Consumer Finance Act, or CCCFA. This comes as a particular priority with its inclusion in our coalition agreement with ACT, which, to quote, states, "We will rewrite the CCCFA to protect vulnerable consumers without unnecessarily limiting access to credit." Changes that have been made since 2019 onwards have led to processing times for lending applications increasing significantly across all loan types. I've heard from banks that an estimated 6 to 7% of applicants who would have otherwise qualified for a mortgage have had to be turned down. Changes needed to address this. In my view, it is the detailed regulations and the strong liability regime that need to be reformed. Together, these two things have led to three things. First, led to an overly risk-averse lending decisions. Secondly, created unnecessary compliance costs. And thirdly, and most importantly, reduced access to credit for consumers. The intent, as with CoFI, was not to undermine good conduct requirements, especially for high-cost lenders who can prey on our most vulnerable Kiwis. However, the changes have unfortunately led to a significant decline in both traditional and short-term lending. The result has seen many vulnerable borrowers having to turn to alternative, unregulated, high-cost sources, the very people the changes were seeking to protect them from. We aim to subject high-cost lenders to adequate regulation surrounding lending practices. I'm proposing to reform consumer credit legislation to address this, and I propose doing a two-stage approach. First stage, I'm going to remove the prescriptive affordability requirements for lower risk lending. I expect to do this soon as a matter of priority. At a second stage, I will undertake a more substantive review of the CCCFA. This will include reviewing the penalty and disclosure regime and its relationship with CoFI. The specific changes will be announced in the coming months. Another reform that I'd like to talk about today is the reform of the Companies Act. The Companies Act is an important piece of legislation. It provides the operating framework for all New Zealand companies, including those in the financial services sector. It's been an important part of the corporate landscape of New Zealand for decades. But it's now 30 years old. I think aspects of it are out of date and can be improved. To this end, I'm considering how it might be improved and how these changes might be progressed. This is an important medium-term project, but rest assured I will provide more details on this further down the track. But in essence, what we want to do is to simplify, modernise and digitalise the Companies Act. The reforms I've spoken about today, namely restructuring the Twin Peaks regulatory framework, simplifying licence obligations, CoFI, CCCFA and the Companies Act are my current priorities. But looking ahead, I see a need to address many other issues in the sector as well. I agree with the Council that there are longer-term issues in New Zealand. New Zealanders are not as financially illiterate as we want them to be. New Zealanders aren't always prepared for retirement, and some New Zealanders struggle to access affordable healthcare. I expect the reforms mentioned today will make some progress towards addressing these longer-term issues. Reducing burdens on all businesses will make it easier for customers to engage with and receive financial advice from financial services, for one. But there is still much to be done. Looking further into the future, I'm interested in exploring changes in our capital market settings to help New Zealand businesses and investors thrive. I'm also interested in changing KiwiSaver settings to help New Zealanders save more for their retirement. I look forward to discussing this more with you in due course. But I'd also like to take a look at the work on insurance contract law so that insurers and policyholders have better certainty about the deals they're striking. As with the capital markets and KiwiSaver work, this is a future work stream, and more information on this will come at a later date. In closing, I would like to reiterate that the government is committed to improving outcomes for all New Zealanders. We need a thriving financial services sector to do that. That's because for consumers to get the help they need, businesses need to be able to work effectively. I'm confident that the reforms I've announced today will move us closer to that vision, and I believe New Zealanders will be better off because of them. The financial services sector is an important part to play in getting our economy back on track. I'm confident that you will all continue to play your part and that we will continue to have a constructive discussion between government and the industry. Thank you all again for having me today. I look forward to speaking to you more, and today is the first of many conversations that we will continue to have. Tēnā koutou, tēnā koutou, tēnā koutou katoa. Thank you.
Minister, thank you for that. That's a lot of change. That's pretty revolutionary view of where the sector should be heading.
Yeah, I just think it's very timely. Everyone's, as I said, everyone's tried to do the right thing, but I just think that we've got to stop and pause and look and make sure that everything is coherent. And I've seen it, and I've also in discussions with people like you in the group. It's just timely that we actually have a proper review of where we are, make sure the legislation's working well together, and also updating things like the Companies Act, which now obviously need to be done properly.
Has that been a consistent theme that you've heard on your travels around complexity is stifling things, so let's try and simplify?
Yeah, certainly it has. And of course, I've spoken many times at this conferences before, and even over the last couple of years, I've been talking about looking at the architecture of the legislation that relates to the financial services sector. So what I'm doing is bringing that to life. The biggest issue, I've got so much I like to do, and working with MB, we're just trying to do it in sort of half-year blocks. And obviously I've got more stuff I want to do. I can keep going for years. But we just got to try and finish small bits, get it done, move on, give you all certainty. Because really, at the end of my tenure of this role, whenever that might be, but I want to make sure that we put the sector back on a footing where you feel like you can go into business. You do want to be part of this sector. And as one of the big things I worry about is this inability now, or difficulty of actually getting good advice from people, because we're so constrained about wanting to offer or proffer advice. That's the wrong thing. New Zealanders need access to great financial advice, and we just got to make sure the settings are there so people have the courage and the ability to do that.
Just coming back to a point you raised earlier, which is, you were in opposition developing plans. You come into the role. How do you determine what's your order of priority? What are the most important things to fix? How did you kind of work through that?
Well, obviously we had the coalition agreement, so the two things, CCCFA and CoFI, I must deal with quickly, and I'm obviously working at speed on those. But that architecture, I think, is a big strategic stuff, and the earlier I start that, the better. And the Companies Act, I've always been very interested, but I could, next time I come and talk to you, I'll talk about what we can do around the capital markets, because one of the big issues I've got, if you put on my other portfolio hats, is New Zealand businesses need access to capital and to debt. And I just want to make sure that settings, so all we've done, and I sat down with the MB, we've got limited resources. We're just going to do it in little chunks. I'm looking at Andy and Paul down there. We're just agreeing to do it in small chunks, they're quite significant chunks, but I want to deliver stuff and then we'll move on to the next stuff and not try to do too much.
There's lots of fantastic questions coming through, which I will head to in a moment. Minister, prior to the election, there were a number of announcements made in relation to KiwiSaver, to buy flocks of sheep, to pay for rental bonds. There are a range of those kind of ideas. Where are those up to?
I'm not actively considering those at the moment. When I come back to you about KiwiSaver, actually, there's a wider argument, and I talked about changing some of the settings. Some of those issues that we were raised, obviously we're now in a coalition agreement, and whether they all progress will be a matter of whether the ministers want to come and have a chat to me about those specific initiatives. But the KiwiSaver debate obviously is an issue about Kiwis not saving enough for retirement. I think it's the biggest issue, apart from the divisiveness of our society. But the big financial risk for New Zealand is actually around savings and retirement. And we need to be quite courageous about what we're going to do about that. And KiwiSaver plays an important part of it. So encouraging people to save more, I think, is vitally important. But I think also some of the settings we can look at in time. But again, this will be a detailed conversation I'll have with people.
Question from the audience. At the last FSC conference, the message was, let's think about repealing CoFI. Your comments today are a little different to that. What transpired in between?
Well, Robert alluded to it. I've had many meetings with lots of people around CoFI. And obviously people are starting to make applications already to the FMA. So, and more significantly, the large organisations have spent the money, spent the time doing a lot of those applications, and they're going in. So what they said to me is, look, let that process run. And so I accepted that, and I think that's a good idea. What I'm more worried about is the many smaller institutions, and I've met some of you, who haven't yet started it, because you're looking at this thing going, wow, I don't know how big it is. It's got a very costly process, and it's a very expensive from a time perspective. And so what I'm more focused on, the smaller, medium to small financial institutions, and to give you better direction of travel. So you now know, and Sam will talk more about it, but you need to tailor your fair conduct program according to your business. And you have discretion as the management and directors of that business to determine that. And they will be quite different. And we don't want teams, but we want effective programs. And to help that, Sam's obviously from the FMA going to provide some guidance around that. She'll talk more about that. But I think that gives more certainty in terms of getting people on that runway, because everyone does need to make their CoFI application by March next year.
Another really great question here. Your government has a very packed agenda. What's your time frame for your Twin Peaks and conduct licensing regime to kick in for? So in terms of the process, I'm trying to do both CCCFA and CoFI. We're going to do the regulatory change pretty quickly over the next couple of months or so. And then we'll do the legislative change probably around the middle of this year, in that sort of third quarter, and try and put that all through. So that's important we do that. And I talked about transitional arrangements. So this is why I'm obviously FMA have a big role to play on this as well. But we'll put in as much as we can as quickly as possible. But what I wanted to do very clearly today is to deal with this issue, because I know many of you are wondering how we're going to play it. Just changing topics briefly, this relates to FBT on group schemes. Is there any consideration to remove FBT?
Is this an insurance question?
It's an insurance question. It is. Thank you. For employer-funded group schemes, especially for group healthcare, which is one of the impediments to large organisations and small putting in place group schemes for their employees?
Yeah, unfortunately I lost the tax portfolio, but I was speaking to a couple of you earlier on. You'll need to go and see Minister Watts, but look, right now we're, as you imagine, in the government and the turnaround job we've got some really big priorities. There's a new tax bill coming through very shortly around some of the tax changes we talked about during the election. You know, all those big focuses in all of the portfolios, we're just trying to get onto the runway, dealing with those 100-point plan that I talked about. That's the big focus. We're halfway through 100 days. So all those sort of issues, they'll be sort of picked up in time, probably in the next year or so, because there is just such a legislative workload we've got to get through. And the biggest issue I've actually got is how do I actually get enough legislation time in the House to pass some of these things?
Because that is an issue, right? Because
Yeah.
every minister's doing what you're
Yeah.
doing, which is getting your priority list.
Yeah.
How does that give effect when there's competing pieces of change that need to all get on the order book?
You talk to Mr. Bishop and make sure you put up a good case. But also, all ministers have had to do a prioritisation, which we're discussing with the Prime Minister. So those key aspects will be all put into a program. So that also helps with the prioritisation, because each minister's going to make sure that they've got a priority list that they're heading to.
Got time for a couple more questions. This is a pretty forthright and provocative one. It relates to deterrence from the FMA or from the regulators. What's the minister's view on the focus of enforcement by the FMA? Is the investment in the public interest, and does it create a culture of trust in the sector?
So is that just elaborate a little bit more in terms of what, just general inquiries or specific areas?
I think generally. So what's the minister's view on the focus of enforcement by the FMA?
Look, FMA have got a very important role in enforcement, but there's a balancing act, isn't there? There's a need for the FMA to make sure that it provides proper guidance, but it's also got an enforcement role. And I'm not going to talk about specific case or anything like that. It's not my role. But I think that's an issue for the board of the FMA. I'm obviously in contact with the board and Samantha. But we just need to make sure that it is the right balance. And sometimes things might be right, and sometimes it's wrong. I've got the same issue with ComCom about their enforcement, because they've also got a large role to play. And you could argue in some ways that the ComCom perhaps hasn't been as active as it might have been. So, we're just regulators all through time go up and down. Sometimes they do it well, sometimes they don't.
Time for three last questions. The KiwiSaver question. When will KiwiSaver be reviewed? You did point to some in your speech.
It'll probably be something I'll be turning my mind to in the second half of this year. As I say, it's part of that capital mix. I've talked about this before in the meetings here, but I look at the 100 billion that's now in KiwiSaver, and I really want to help the industry take the opportunity, if they so choose, to invest in an alternative asset class, which is supporting great New Zealand established businesses. And there's some restraints around that, which I'm aware of, two in particular. So I'll be working with them. So it's not just about KiwiSaver, but it's also about how we mobilise capital in New Zealand.
Minister, one last question. It always amazes me people who step up into the very public life of public service. You've been in politics a long time. What are you most looking forward to over the next of the term of your government?
Doing stuff.
Fantastic. We will.
I'm looking down here at Andy and Paul. They are the ones that worried. But let's get on. Let's get this sector rocking, eh? It's just been... what I don't like hearing is how you guys sort of feel like you're beared down with all the regulations. Someone came up to me before and said to me, all this compliance cost is just... we work our way through it, but it's not exciting stuff to do. We do need certain rules and regulations, but what I want to do is really get this industry cracking and feel like you want to be part of it. And how do we attract new people into the industry? And I think, that's the objective we should be trying to achieve. And the bits I can do to try and remove some of that cost burden, whatever it is that you feel that you have, to loosen up this sector and make it grow like Billio, that's what I'm really keen to do.
Minister, thank you for the fireside chat. Thank you for your speech. We have a formal vote of thanks for you. But on behalf of all of us here, we certainly wish you well in the term of your over the next 12 months to bring change.
Hopefully
we're supporting
longer than
it. And away we go. Thank you.
Yeah, great session and sense of the direction of travel. And now Lloyd Kavanagh partner Minter Ellison Rudd Watts will give a formal vote of thanks. Welcome, Lloyd.
Tēnā koutou katoa. Actually, I feel quite honoured to be giving this vote of thanks for two reasons. First of all, I've known the Minister for a very long time, since before he went into Parliament, and I hear from family that he's a very good MP for Port Waikato and before that Honua. Also, I'm very honoured to give this vote of thanks because Minter Ellison Rudd Watts has been a long-time member of the Financial Services Council, going back even before its formation to, I think it was called ISI, the Insurance, Savings and Investment Association. So we're closely associated with this organisation and know how important it is as part of the infrastructure. Turning to the Minister, there are some particular points that I'd like to call out and thank you for acknowledging. First of all, the importance of the financial services sector to New Zealand's economy. I think it often doesn't catch the interest of the media or wider New Zealand that this sector in itself is a major contributor to GDP directly. And secondly, that of course finance is the life and investment is the lifeblood of the rest of the economy. So that's why what the Minister is talking about is so important. I also would thank the Minister for going back to and referring to the work that so many did coming out of the GFC, which resulted in the formation of the FMA, the passing of the Financial Markets Conduct Act, which I think has been a reform which has endured and contributed successfully, and good to hear the Minister acknowledging that in some ways we need to go back to some of those principles. For me, I think it's always worth going back to sections 3 and 4. I'm a lawyer, so I would do that. But looking at what the purposes were, which included explicitly things like efficiency and encouraging innovation, and the importance of businesses as well as consumers and investors. So that was fantastic. Finally, I really want to thank the Minister for leaning into this sector. He's got energy and passion for it. We do understand the coalition government has a whole series of things it wants to address, but I think I could certainly hear that the Minister is putting his energy into this sector, and I guess I just warn him that he's going to continue to get a lot of us engaging and helping him continue the direction of travel that he's outlined at us today.